A comparative analysis-based approach for Bitcoin price forecasting. Abstract Bitcoin, one of the most famous and high-in-demand cryptocurrencies, is a type of digital asset that is extremely difficult to track and make predictions upon. In addition, Bitcoin price does not correlate with market movements, therefore, predicting its price action and its locus is an ordeal. In this paper, we have followed a comparative analysis approach, wherein we are using 4 different models to predict the trend of BTC Time series data. The results justify that the models have achieved accurate forecasting trends. During the period of 16th to December 31st, 2020, Bitcoin prices experienced considerably high swings, due to the increased demand for it. In quantitative terms, the prices experienced fluctuations to the tune of $8,000. Despite these enormous price changes, we were able to achieve a model that helped us attain a mean absolute error, MA, of $153.55 and mean square error, MSE, of $43,231.80. Conventional Bitcoin price predicting researches follow a single to 2 model approach. However, for a highly volatile asset like Bitcoin, making long-term predictions and generalizing them based on limited number of models results in low accuracy outputs. This gap has been bridged in our research. We have worked with different models, as well as fragmented the time intervals into smaller portions, post which the prediction was made for only 2 days. Using this approach, we attained results with least error rates. The results obtained clearly show that ARIMA is the best model for predicting the future trends for BTC time series data. It takes into account the different types of decompositions like regular trend, sessional and residual trend, making the model give the best results. Keywords: cryptocurrency, blockchain, Bitcoin, time series analysis, Facebook profit, Lstm, ARIMA, XGBoost. Introduction. Technology has been disrupting the way humans live, work and even transact. Globally, economies and financial institutions have been going digital at an unprecedentedly fast pace. The advent of fintech has left the conventional financial system archaic. One of the most recent developments in this space is the advent of cryptocurrencies, more specifically, the most talked about, Bitcoin. Bitcoin, one of the original and first cryptocurrencies, currently has a market capitalization north of around $600 billion, which would only grow steeply in the forthcoming years. This digital currency derives its popularity from 2 features, its decentralized nature 2 and the extraordinary volatility 3 that this asset exhibits. The returns that the investors yield on this investment is significantly higher than that of traditional banking or market schemes. Moreover, since there is no government intervention, the price is solely controlled by the public, for the public. Generalizing, the prices of cryptocurrencies are not driven by the market, therefore technical analysis becomes important in determining the price range of Bitcoin over a period. Since technical analysis does not depend on external economic data, solely past price patterns are used to predict the price of Bitcoin. In recent researches, Lstm and ARIMA models were used to forecast prices of Indian stocks for a period of 5 months. Lstm showed better results compared to ARIMA 5. Another research where gradient boost tree model was used to capture Twitter data and public sentiments for a tenure of 3.5 weeks, analyzed each tweet, for which over 50% accuracy was achieved. 6. A study carried out by Wind forecasted the closing price of the Myanmar Stock Price Index, MYNPIX, using ARIMA and Facebook profit. For all 3 periods, daily, weekly, and monthly, profit, having less error rate, has outperformed ARIMA 7. Understanding the recent developments and with reference to researches published in this domain, we have carried out condensation of various approaches, in our research, which were followed to make predictions for equity markets and other cryptocurrencies. A comparative analysis of 4 models has been incorporated to furnish the best possible prediction model, wherein each model individually contributes to the increased efficiency of the entire mechanism. 2. Methodology. The below drawn flow graph shows our approach towards building the models and comparing them based on. First, we choose the data set on which different models are to trained. The dataset used in our case is the Bitcoin historical dataset. It has the data between the period of January 1, 2012 to December 31, 2020, with the open high-low close, OHLC, prices of Bitcoin. Additionally, data of the volume of Bitcoin transacted, as well as the corresponding currency's volume was taken into consideration. 8. This is followed by filtering time series data by data pre-processing, followed by dividing the dataset into test and train data. The four models, Lstm, XGBoost, Profit, and ARIMA are trained on the training data and then the comparison of results is made on the test data. The aforesaid models have been described in detail in following section, which justifies their suitability for our project. 3 Machine Learning Models. A long short-term memory, LSTM. LSTM is a type of recurrent neural network, RNN, that is used in the field of deep learning. It's used in a variety of fields, including machine translation and speech recognition, and it's also good at classifying, processing, and forecasting time series data. 10. For building the LSTM model, the first step contains the filtering of the information which is not required in the cell states and is thrown away. Then, information which is to be processed is stored in the cell states. This is followed by a sigmoid layer which acts as a filter for what information is to be taken in input layer. And then, based on these filtered inputs going through the sigmoid layer and the series of 10 functions, the final output is obtained. XGBoost classifier. XGBoost is a gradient boosting algorithm that uses a decision tree based ensemble machine learning algorithm. It's made to be extremely powerful, adaptable, and portable. XGBoost is the best option for structured/tabular data ranging from small to medium sizes and also decision tree based problems because it offers parallel tree boosting. When adding new models, it uses the gradient descent algorithm to reduce the loss. Therefore, it is known as gradient boosting. XGBoost basically aims to minimize the regularized objective function, L1 and L2. This is accomplished by integrating the uncertainty through the penalty term with the convex loss function dependent on the discrepancy between the expected and goal outputs. After each phase of the training process, new trees are introduced that project the residual/errors of the prior trees. The final prediction is made by combining these. See Facebook Profit. Profit is a model for forecasting time series data that was created by Facebook. Nonlinear patterns align with annual, weekly, and regular seasonality in the generalized additive model, GAM. It is extremely effective at predicting highly seasonal data for any kind of pattern, whether the data is highly seasonal or missing. The Profit employs a 3-part time series model with trend, seasonality, and holidays as its components. The equation representing the model is given by. In equation 1, G, T, denotes logistic growth, S, T, denotes periodic shifts, H, T, denotes effect due to holiday, and ET takes into account any missed irregularities by the model 7-9. D. Autoregressive integrated moving average, ARIMA. This model is one of the variants of the most used autoregressive moving average, ARMA. This model is designed for time series data analysis, processing, and forecasting. Each ARIMA model is denoted by the letters P, D, and Q, where P denotes how many numbers of lagging observations does the model have, D denotes the number of times difference between the raw observations are observed, and finally Q is the size of the moving average, MA, window. Whereas for seasonal data, ARIMA is denoted with a similar expression of the non-seasonal data with 4 additional parameters P, D, Q, and M, where M denotes the count of the periods each season has, P refers to the autoregressive part of the model, D represents the differencing term and Q represents the moving average, MA, part of the ARIMA model 1213. For result analysis. Based on the different methods/models used, the models were trained on the historical data of Bitcoin prices from December 16, 2020 to December 29, 2020, and the results are compared on the prediction made by all the models from December 29, 2020 to December 31, 2020. This specific period experienced a steep increase of $8,000 approximate in the Bitcoin prices. So, the extreme volatility of Bitcoin prices is also taken into consideration, which helps in identification of the best model in the worst circumstances. The two main performance metrics, namely mean average error, MA, and mean square error, MSE, computed for each model 14. The results are tabulated in Table 1. A detailed explanation of these results has been provided below. On the basis of values obtained in Table 1, we have compared each of the models' performance with the other prediction models, alongside justifying the reason for choosing or rejecting the particular model for the fulfillment of our purpose. A long short-term memory, LSTM. Figure 2 depicts the LSTM model's forecast versus actual prices from the time period of December 23 to December 31 st. The LSTM is trained via sigmoid activation function along with atom optimizer for 100 epochs. The error between predictions and actual is compared via mean squared error, MSE, and mean average error, MA. The MSE for Lstm is 114,466.39 and May is $264.28, which is not that high compared to their models, but is not best model for our use case. See Facebook profit. Figure 4 depicts the plot of Facebook profit forecast versus actual prices from December 23 to December 31. The MSE for Facebook profit is 334,612.50 and MAE is $419.39, which is less accurate compared to both Lstm and XG Boost. This shows that Facebook profit is not as flexible for volatile data prediction. Therefore, Facebook profit is also not the best model in our case. D. Auto-regressive integrated moving average, ARIMA. The ARIMA forecast vs actual prices for the period between December 23 to December 31 is shown in Figure 5. The MSE for ARIMA is 43,231.80 and May is $153.55, which is the least compared to all of the other models. Therefore, ARIMA is the best model for this particular use case with the most accuracy. V. Conclusion. This paper presents an enhanced inclusive solution for carrying out the time series analysis for BTC dataset. The BTC dataset contains the OHLC, open high low close, data between the period of January 1, 2012 and December 31, 2020. Due to the extreme volatility in the price value, we have chosen to predict the prices from the period of December 29, 2020 to December 31, 2020. 4 different models, namely Lstm, ARIMA, XGBoost, and Facebook profit were used for achieving the aforementioned objective. The performance parameters taken into consideration for our purpose were mean absolute error, MA, and mean squared error, MSE. The results thus obtained clearly indicate that ARIMA with MA of $153.55 and MSE of 43,231.80 emerges as the best model among the other 3. Table 1. The better performance of ARIMA compared to others can be attributed to the fact that it takes into account the different types of decompositions like regular trend, sessional and residual trend. Thus, even when deviation of prices is higher than normal, the ARIMA model is very accurate while making predictions for both short as well as long-term prices. In further advancements to the study, capturing governing factors would result in better accuracy of prediction. For example, obtaining data on the trending page of Twitter would provide us with insights about public